Ira Epstein. And let me start off on this financial market wrap-up by wishing one and all happy holidays, Merry Christmas, Happy Hanukkah, whatever you're taking. I wish you all the very best, and I want to personally thank you for watching this channel. It means a lot. We've built it up. We have a nice following. You know, can we make it bigger? Probably, and we'll probably work on that this year. We have hardcore followers, thousands of them, and it's worked out. Now, I want to remind you before I get going on this that if you want to take the new outside day course, got to say this because the sale price is going to end on this, and it's going to end this coming Sunday, Central Time, midnight. So Sunday. Sale over. You won't get this price again. The course normally goes for $120. It's $90. It includes, by the way, free access for 2 weeks to all my research and a month worth of access to our top value of the charting software. And if you know what charting software costs out there, for good charting software, folks, it doesn't come cheap. You know, I'm sure you realize that. What you get for free is what you get for free. It's never the right thing. I don't care the firm you go to, they start charging you for the other features. I think ours puts most away. How do I know? I developed it. If you take a look at the research, you look at what you get there, that's worth more than the course by itself. The course is 9 videos. I give you examples in futures, stocks, ETFs, and spiders, pointing out how often this comes about, this pattern. Is it a continuation pattern? How often? You just take and eyeball it. That's all you need to do, and you get the idea. And when it doesn't act as the continuation pattern, because it fails under the rules I have, what does it often do? You'll be surprised with that. So it happens a lot. Something to add to your arsenal, and that's what these courses are. Some of them are more, how do I say it? They're more enlightening than others. Others, because you see a pattern all the time and you don't recognize what to do with it in its own way, it's more important than the enlightening one. You have to make that decision for yourself. But obviously, to get this, don't bother calling us now. We're not going to be picking up the phones during the Christmas holiday. So you can either go to the website under the word education, or move your cursor up here, give it a click, and away you go. So with that, let's go back to the markets and talk them at this point. So when I'm looking at them, and we look at the E-mini S&P, and we take a look at a monthly area chart of closes, you have been down literally most of the year, not the whole year, most of the year, under that number. You've had a bearish year. I think you'd agree with that as to where you're at. We'll see, and we'll be sick of it in no time. Everybody, what did the year do? How's this? What's going to happen in 2023? I laugh when I read the projections for 2023 because most people that have my experience know it's written for the guy that's new to the markets or newer. It's an idea, but take the market a week at a time at the longest stretch, okay? I wonder how it goes if you take it a quarter at a time. But taking it a year at a time rarely doesn't work out. Doesn't mean it doesn't work what somebody wrote. It's more luck than anything else. And it's rarely exactly for the reasons they said. Market's just a moving animal. If you take a look at the weekly chart, you know, you're basically trading just 3 points underneath that, but the bias is down. You got over it, you've pulled back to it, and you're fighting a battle at that number. When we look at the chart action, it's hard to argue we didn't have this big up and all of a sudden an outside week down. Did we not just talk about it? That's so darn important. And it's important because it sets up what a continuation pattern just might be in this chart. When I look at the next chart, you can see you didn't have anything like that here. So now you've got the momentum, but is it trending? No. You have a higher high, lower low. Where's the battleground? We just looked at it, the 18-week average of closes. Where might the market be headed? Probably 36.62 to 35.67 if it wants to drop this coming week or the next couple of weeks. And on the way up, big time resistance now, 41.77 to 41.99. Now, I know some are going to say to me, Ira, What about the Santa Claus rally? Well, it did have a false start. I thought that maybe we'd be seeing lows the week before. Didn't get it. Now you have to get somewhere along the line here a bounce, but I don't think you're going very far, even if Santa decides to come. Why did he get derailed? It's cold. It's in Chicago, -7. Okay? New York is shut down. Are you taking a look at the disaster at the airports, rail, everything that's going on? We got hit with one of these polar vortexes, and Santa's smart, and the elves are smart, and the deer are smarter than he is. And they said, no, we're going back in for a little bit. We'll decide to come out after Christmas and see if it's worth it. In the taking a look at the market with the slow stochastic down. So is there anything set up here? Not in terms of a trend. When we take a look at the Dow, you can see that you are not embedding. You can see that the battleground is very clear. It's the 100-week moving average down to the 18-week. Where's the resistance? Well, if it can rally, it might be at 35,526. Stronger than the S&P, no question about it. NASDAQ, one of the weakest. Higher high, lower low, and under everything. Get scared in this chart. What do I mean? You're about to see an attempt by the 18-week to get underneath the 200-week average. That isn't good. That's another crossover in the market that could say we're going back here to the 10,546 level. In the Russell, the market has been fighting, past tense, for weeks. It began all the way back over here. So about 2 months ago, fighting at the 200-day average and the 200-week average, and the 18-week average. Still, the battle is going on in the marketplace. In the 30-year bond, we had a nice rally. Now, are you of the camp that the Fed, that it doesn't matter what they say, they're going to have to blink and go the other route? Or do you think you will hit along the line here something that gets sticky with inflation that means that, yes, you get a decline like this? Remember, when futures go up, you're getting a real decline in the 30-year, and then it hits a road where it's going to sit around. I certainly am not as bearish this chart as I would be on a 5-year or a 2-year. No question about that. And the 10-year is more similar, if you will, to the 30. It got up and has fallen back for that right there. In the dollar index, we are still very much in a bear trend. And no, I'm not buying into the people that think the dollar is going to be bullish because interest rates are going to keep going higher. If we go higher, everybody else goes higher with us. You haven't seen that yet? You're not paying attention? Even the Bank of Japan expanded this time. And that's their way of laying the groundwork for the next bank governor that comes in April to have an open policy for whatever he wants to do. But more important than that, if you looked at the yen, it bottomed out a long time ago. This is just catching up with chart action that already happened. In the eurocurrency, this is bullish action. Pullbacks in this market still look to me like the pros are going to buy this market. In the Canadian dollar, it's bearish action. The resistance is the 18-week average of closes. You'd have to get over 74, 71 and a half to negate the bearish trend. You still have a door open for dropping to the lower Bollinger Band. In the end, this is where you bottomed out. What the yen just did with this big move we had, that's sort of like, a climax to it. And that's why the market's fighting a battle at the upper Bollinger Band. It's already in this market to a big degree. Now we wait. You're not embedded. You're up to that band. I think the professional money came out in longs for the very first time this week. Bitcoin. The big news to the downside for this leg has ended. Now, is there another leg coming? All week long, I pointed out to you that one of the big miners had declared bankruptcy. They're not out of business. They've declared bankruptcy. So they'll restructure and the lenders will take them over. Will they be able to stay in business becomes the big question. What's going to happen with all these coins next? You'll find out the week of Jan 3rd. That's when SBF, that gentleman, Mr. Bankman-Fried, he will have his day in court for his, can he meet his bail? Will the judge accept the terms? And then the case goes on and on. He's going to be found guilty because two of the close people, number one, his girlfriend and another executive in his company, and the number two man have turned on him. and they have turned state's evidence. Do you know how hard that's going to be to believe? He's already told you he didn't pay enough attention. So it'll be, I hope, quick out of the way, because people that want Bitcoin to have value need that to go away. But here's your dilemma with all these. The government is coming. You're not going to be able to stop it. They're here. They're going to crack down. They didn't. I don't know if they ever wanted to legitimize Bitcoin and all the cryptos. They don't have a choice anymore. It's too much of a public issue now. So that's probably going to happen. On the energy markets, we have to pay attention to what Russian President Putin says he's going to do. The market is saying that he's going to cut his production for export by 5 to 7%. That he won't deal with Europe if they're put on these price caps. We'll see if he holds his word on that. And of course, the attack is going to pick up on the Ukraine even more aggressive now, has to pick up more aggressive as they take their maneuvers at this point of the year and use the winter as their friend. How are they fighting Ukraine? Missiles. Patriot's not there. Is one battery going to be enough? It isn't. You know that. I know that. Not one Patriot battery. You got a higher high, lower low. Why we're only giving them one is something I can't figure out, by the way. Why? One. We want them to win the battle, give them what they need. It's not an offensive weapon. It's a defensive weapon. Okay. The market looks to be turning here in momentum, but there's nothing there. And it's certainly not an exciting looking chart, nor is WTI. I can see the resistance up here, but we haven't been trending. We have been out of a trend for a long time. We had a bear market rally, and then we fell apart at the 18-week average, came down. Is it going to get exciting here? People think you're going to cross those averages and start getting bullish into 2023. I'm one of those people that think that there's a good chance of that if we get a shallow recession, because I look for production to be cut by OPEC, by Russia. So I'm looking for those things to happen. In gasoline, as we came down last week, I said, you got to come out of the market. This is your challenge of the 200-week average Bollinger Band. And it's exactly what I teach in my enhanced Bollinger Band course. And now the resistance comes in up here, and you lost the ability to have an embedded reading. You don't have that now. Now, I look for more of a rally into that general zone. So you put it together, you try to come up with game plans. You know you're going to get noise in trading, as many traders are just evening up books, and it's going to be a week where we get a flurry of trade for the first 3 days of the week, and then it'll die off again. And then the week after, things start getting back to normal. I'm Ira Epstein. Remember the the outside day course. You can get to it by just moving your cursor up here. You have a great holiday. Thanks for being with me. Take care.